The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 5th day of February. What we're looking at here is in the Dow. Dow's up 150 at 25,390. Made an all-time, a recovery high, I should say, of 25,422, well above the 25,250 level that I said is where I'm looking at a resistance. There was another Chapman Wave automated resistance right here. What does that say? It says, if I can just get it. Okay, 25,498 and 25,578. And 25,231 was the one below. So it's jumping over these levels quite quickly. Now it's the MACD is still good, but you can see the histogram, these little vertical lines starting to pull back. Stochastic had jumped from 91%, actually jumped from 2 days ago, 87% to 94% right now. That is very good action. My suspicion is that we're getting to an area where almost all the indices, if I do this, let me just go there. If I do this and I show you on all the different indices, look, there's a Chapman Wave automated resistance. See those, all those automated resistance levels? Let me go through one at a time. SPX, that's the S&P. So the Dow is up, where are we? 146 at 25,385. The S&P is up at 2732. It's up 7.91. You can see here it's got the 200-period exponential moving average in 2710 to 2708 to 2710.90 are the resistance levels. We're getting there. IWM, we'll just do the IWM right now. IWM is trading at this particular moment at 150.62. It's minus 34. Look at those resistance levels. It's getting close to the the 200-period exponential moving average. MACD is good, but starting to turn down a little bit. And the stochastics at 95%. If you look at the QQQ, here again, you've got resistance levels. Here it popped through some. And the last one was 168.75. It hit today 171.09. So now all of a sudden you have to look at that and say that's support. 168 to 167. That's going to be good support with the 200-period exponential moving average right there at about 167.25. So let's get out of that. I just wanted to show you, you can go through anything. Let me go through Amazon. AMZN, automated Chapman Wave projections, has right there. 1698 to 1762. What was the high right there? 1736. So it got into the zone, pulled back quite sharply. And at this point, Amazon is at 1657. It is up 24. Let's look at Google. I'm not going to say Alphabet. I'm going to say Google. Google trading right now down about 6.80 at 1125. Yeah, all the resistance levels, it popped up above it. So 1112 to 1114 to 1112 is going to be the support level we're looking at right now. So as I'm going through these things, it highlights what I've been looking at for a couple of days, that they're starting to see a cap on the upside. Smashing through it would be really positive. I'll go through different things. Google has a doji candle right now. We'll see how this doji candle resolves itself. I'm going to go to gold. Gold is down a little bit. Gold is down now it's down 1.9. It's at 1317.4. You'll see that it made a high of 1331.10. It's had 3 days to consolidate after that doji candle recovery high. It's above the 200-period moving average in the weekly of 1309. It's trading at 1317 right now. I think this consolidation can go just a little longer. And what's very important about this consolidation is that it's got a beautiful base of support between 1300 and 1280. So even if there's A worst case that it drops another 30 points, it goes right into key support. That's going to be important. Silver right now is trading at, I didn't see it over the last couple of minutes, hours, 1582, down 0.06. It made a peak F in the daily, and right there with the doji candle, little spinning top there. And what you're looking at is the 9 and the 14 period moving averages down to 1574 support. My suspicion is going to go a little bit lower. It is into the support area, but my thinking here is that the 200 period moving average of 1552 really needs to get tested. EUR USD, the euro dollar currency pair, let's call it the euro for now, is trading at 1.140, and that is just down a little bit. I think it's stuck in a range towards the lower part of the range. The weekly chart still looks very, very weak. So does the monthly chart. But the USD JPY, and this is the yen, we'll see how this is going to formulate itself over the coming few days, going to Friday's close for a weekly, because the weekly, this is the first time it's touched the 9-period exponential moving average of 110.18. Since it broke down that ugly, ugly candle, remember that was December the 21st, just smashed to the downside. This is nice at a peak D with not a very, very big gain since initially that very big Chapman wave Roman candle from 105 low. Really the base of that is down at the 107.50 area. So at 109.95, it's holding well. It's not doing great, it's just holding very well. Now we're going to get to the dollar. The dollar was up earlier. Let's see if it's still up. Yeah, it's up 23 ticks at 96.07. This is gray leg A. This is nice action coming off the 200 period exponential moving average. And if you look at the weekly chart suggests that based on the MACD and stochastic, there's still quite a bit of work to be done in time. I'm not so sure yet about price, but certainly in time for the dollar to keep consolidating. We're still bullish the dollar from way back April, and this is a long-term play, and the monthly chart is still holding really well. Now, if you go to the TLT, this is the Lehman 20-year T-bond fund, trading it up 52 cents at 120.93. I think we're going to be told a lot about what happens over the coming few days if the market just takes a bit of a breather, pulls back 200, 300, 400 points. That means that money can come out of stocks and go back into bonds, so-called safety of bonds. That'll happen if the bonds go to 122.50, up about 1 3/4, 2 points from here. That'll be very important to say, yep, market can have a bit of a pullback in that interim period. Meantime, back at the ranch, key support is between 120 and 119. So we're going to be watching this one closely. And crude oil, I think pulled back earlier. I don't know if it's still down. Yep, down 0.67 to 53.89. Having made a potential peak E here with the MACD turning just a little bit lower, but still very positive in the stochastic, a little bit negative at 78%. That weekly chart says it needs to get to the 5680s quite soon so that it can show more upside veracity, because right now, if it starts to pull back and it goes underneath 5150, it's at 5391. If it goes underneath that level, that's going to say, uh-oh, crude oil is going to have a bit of a breather. Next thing we want to look at here before we go to the break is, I think I've finished everything that I wanted to do. I'm going to have a look at the XLE. I wanted to show a couple of things here in the XLE, and that is the S&P Select Energy Spider Fund. And then I had some requests. We'll go to the requests. I'll be right back. Basil Chapman, Tiger Technician Zone.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So we're going to look at XLE, and then we're going to go to VFFIF. So XLE is the S&P Select Spider Fund, but this is the Energy Fund. It's in the leg. This is going to be tough now because have I recycled? Let me just see. You've gone to 65.27, 65.25. All right. I wanted to show a couple of things that I was asked about, and I said I will do during the show. And that is how, when I'm looking at these different indicators, how do I use them? Well, I have classes on these things, but in the meantime, what I want you to show you, which is really quite simple, is you see the way the MACD crossed positive here? That is the 9-period differential, the green line, the faster moving average, crossed positive, and you can see that reflected in the histogram. That's how it's indicated. The 0% line became green and positive. Well, this is one of the things. I had a couple of questions. One is about the V that I was discussing yesterday, the uppercase V and the lowercase V in a retracement, in a recovery phase. And how do I use these technicals? Well, first of all, you see the distance between, I think you can call it theta, but I don't want to get into terms that I'm not 100% sure of if it relates to this. But the distance between the green line, the faster moving average, and the slow red line, the 26-period moving average, that gives you the impetus, that gives you the torque, that gives you that first gear shove to go forward, and then you can go to second gear. But that's not really the issue because that's only the MACD. I want the real torque to come from the stochastic. So the stochastic went from single digits, starts to move higher, crosses the 20% line, and then very soon after that, you get the MACD to cross positive. I love that action. So what's the difference between this V right here, that V equals, and this V equals? All right. In this case, it's the lowercase v, and you can see that there was a V shape, but in order to get the 1, 2, 3, 4 bars that was sharply lower, you didn't do it here. You had a beautiful green candle off the low, and then it went green candle, red candle, red candle, green candle, red. So you're already using 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 bars before you can get to 1, 2, 3, 4, 5, the fifth or sixth bar on the left side. And you've moved decisively to the right. So that says to me, I've got to look at this as if it's got the potential of a lowercase v that can turn into an arch formation. All right, arch formation. There it is. So this is a lesson. I said that this is a week that I'll try to give some Chapman wave lessons here because it helps explain what we do, what I do for the subscribers every single day, and what we're looking at and why we're looking at it. And this one says that if the stochastic fails to get to 80% within about 6 or 7 bars without taking out something significant on the left side, what's going to happen is that all of a sudden we're looking at some kind of a failure pattern with an arch. But look what happened. It ran beautifully along the 14-period moving average, the black line. The 9-period, I always talk about the 9-period moving average, was fabulous support. And lo and behold, the MACD started to expand. Now I look at the weekly chart and I say, this particular V right here, the uppercase V, this is closer to it. It isn't exact, but we need the whole of this week to conclude. But so far, there's 3 really big candles to the downside, have been 1, 2, 3, 4, 5, 6. Sorry, I should have said 4 candles, 3 big red ones and the green one. It's taken 6, and I'm kind of just inside the 6th candle. I'm using up time, but I'm closer to the V-shaped formation. What does that say to me? It says that if in the XLE over the next 2 weeks, I wouldn't go longer than 2 weeks, there is a push above this high right here, the high of the 7th of December, 67.99, that high right there, that'll be closer to this kind of the lower V, which is the uppercase V, and that would suggest that there is now a chance that the low that was made in the weekly chart at in the 53s, you can see right here, that was on December the 26th, with almost all the other indices. That's saying that there'll have to be tremendous damage to be able to see this go all the way down and break into an arch formation. And it says, wow, the higher you can go and the quicker, you remember it's speed we're talking about, velocity and speed to the upside. The longer we can keep going to the upside, pushing into the least number of bars to match the left side, the greater the chances are that you're breaking away from the low, and that's a significant low. It's going to take either time or just the worst news over and over and again for days and days, in fact, weeks, to kind of smash down to the 53s again. But if it stalls out here, first of all, we've lost the impetus for this first arch formation because it recycled up. So yes, you could put that in, but I like arches to look like an arch. This looks like kind of a bumpy ride. So it says, keep it in mind. Don't do anything if you don't want to, but just keep it in mind that if there was a pullback, you've got all these support levels of 63.82, 63.20, even the 62 level to hold. You break into the 61, under 61 in the next 2 weeks or so, that's going to be very poor action because you've used up time, you've had a spectacular run, but now you're arching over and you're starting to make the left side levels very important support. On the upside, there's no resistance until you get to this level right here, and that's on the 12th of December at 64.55, where we've already hit 65.27. So we've already gotten above that. So you can go to the next level, and that would be this peak here of 66.63 on the 7th of December. So that's how I like to do it, step by step. Now, question was, what would keep you in a trade, either short or long, for the longest period of time? Well, look, once you made that peak C over there, that was a C minus because it fell back in May, the week of the 25th of 2018. Look, the MACD crossed negative, and even this very sharp rebound to retest those highs couldn't make it. It deflected lower. So this doesn't always work out, but in this case, it was fantastic because it told you that the XLE could now keep going down. Once it broke that left side key support level, look what happened. It just kept it and made this huge expanse of space before the MACD finally saw the 9-period differential turn around sharply, and then cross positive. Now it's cross positive. That's giving you some support. So I want you to go through that just as a kind of an indicator of how you could use some of the technical tools. I try my best to do that. It doesn't always work out. We're only human beings. Sometimes other things get in the way to make us kind of a little nervous about a situation where we shouldn't be. We should be relying very much on the technicals. All right, did that as a little exercise. Now we can go to FFVIF. Is that what it is? Oh my, I lost it. It's right here. It is FFIF, VFFIF. And I don't even know what it is. Village Farms International, trading at over-the-counter stock, trading at 6.8846, up 0.16. Ha, ha, ha. This is very important because look at that spectacular leg A in the weekly chart, but E in the daily. And look at this weekly chart. I'll talk about time frames when we get back. Trading very nicely. It's up 15 cents. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So we're looking at VFFIF. I didn't in the break take the opportunity to check out what it is. Village Farms International. So if you look at the daily chart, look how impressive this is. Just beautiful. More green candles, a couple of little red ones. Breaks out sharply, makes a beautiful bowl formation, and then just takes off. Lovely chart. The question was, what should we do now? Was that the question? Where is the question? Let me try to find it. Both up nice. We're up nicely. how best to play this. Sold some at $7.10 this morning. Had a nice game, but still have a bunch more. Thanks in advance. You know, let me go to 120-minute chart. Yep, let me go to my automated levels. We're looking at, was it VWF? Yes, VFFIF. I think that's what we got. Yes. So $7.16 is the weekly resistance. 6.40 is the, it just snapped right through that. It has a lot in the 10-minute chart. We're seeing 7.15 and 7.33. The high today is up at around about 7.17. And the 120-minute chart doesn't have anything above. But 6.85 is the support. Okay, I just wanted to check that. Now I'm going to do my own homework. And my own homework says, I would, first of all, because of the weekly and the monthly, I'd be looking not so much to take off, but to add. There's a gap from the 200-period moving average. It's way down in the 360, and suddenly, boom, it jumps up, and it jumps, it leaps right over the orange 200-period exponential moving average. How did it know that, right? It keeps going up, doesn't even give it back to retest. Then it pulls back one bar and then starts to climb and goes to this long-legged, long-wicked doji candle with a whole bunch of implications. I don't want to take time right now to do anything about it other than to say that if in the next 2 days it closes above 7.15, that's the high of the day, then you've got the open of 6.87 as a cushion. And if it does it for 2 days, it says there's a good chance you wait. It'll take 3 to 4 days before it tests the low of today of 6. Well, so far the low of today, 6.38. If it closes under 6.38 tomorrow, if that is the low of the day, then 6.87 is going to be resistance. Most importantly, what I'd be looking back for is some kind of a pullback. The 9, the 14, the 200, the 50 are all extremely positive. The MACD is positive. Stochastics at 96% positive. On balance is volume. The blue line is suggesting it's getting a little overbought. So that's the daily. The 120-minute chart is already starting its consolidation, but it's just a little bit of a consolidation. So if you want to take something off, I'd say that this is a good place to take something off. There's no real need just to take it off because everything looks poor. It looks really good. But just on a money management, when you've got a low price stock that's already moved 18%, a very, very strong move, 15, 18%, just from the most recent lows, let alone in 2 days, it's just prudent to take something off. However, if this thing can hold steady for the next week, it doesn't break under 5.70. That's the 9-period moving average between 5.70, 5.31, $5.31 is the next level of support. If I would give it a little time, I probably would say to you, you know what, you could have a rising. Well, you got 710, you got almost the exact high. So I'm just going to say, if you've taken something off, start planning to put that back in 2 parcels. One is a parcel between 565 and 545, and then just have an outlier that says, you know what, if it gets to $5, I'm buying it at a huge discount, 26% or more discount. That's where I'll put my next amount in. So I'm more thinking where I would add than I would take off. I don't know what to tell you about the weekly. It's just a single leg A that should take some time. My thinking is this, that I'm going to do this, and I'll draw it, and we'll see if it's accurate or not. I'm going to draw in a rectangle formation, and I'm going to put it in. I'm going to try to extend it. Well, I can't. I don't want to move too many bars. This already goes out to mid-February. So I've got 6.80 to 5.50. I've given that as a rectangle, and my contention is that somehow or some way it's going to bounce around in this area unless one of 2 things happen. It either spikes to $7.50 in the next 2 days, and that would make $6.50 key support, raises it, or for some reason by Monday of this coming week, you're looking at it down at the $5.30 level rather than just $5.68 to $5.72. So that's the two scenarios. I'm just saying I think it's going to chop around. It's going to take a little while. It needs time, and it'll be trading in the low sixes to the high fives. And we'll treat the high fives as your next entry level if you want to take something off, or if you just wanted to add to it. Okay, next question. Oh, then I had a question about Boeing. So Boeing, if you remember way back, I said Boeing is done for now. I said Boeing is, and then what did it do? It was in the 360s. Darn thing goes all the way to 394, goes to a PD with a round number 375 low that particular week, the week of the 5th of October of 2018. It's 394.28, and then that's it. It comes all the way, did the Chapman wave propeller shaft, midpoint, comes right back to rally, and then it fails. Ooh, I must keep that in mind because we're seeing a pattern very similar in something today. Okay, and then it goes, plunges all the way down to 292. If 392 to 292 can't be called a pretty serious 33% decline, I don't know what can. And then what does it do? It turns around. And then I was the one to say, oops, now it's starting to rally very sharply. If it takes out the high of 369, the round number high of the 3rd of December, something else is going on, and that's very important action, and that I would have to consider that it's going to retest the highs. Why? Because when it came out with earnings, it had a backlog of 90 or 100, I don't know how many. It had a huge backlog of aircraft just for this year, but over the next 20-year backlog was, what did I read, 900? Just an amazing number. So that says it's different. It's not in the defense area. It's in the airline area. And I made a big distinction. I said, you know what? This Chapman wave stalk leg formation says that if it does break out, that can be considered a neck, and that would be very important. And I'm now putting it in a different category to the defense area. Why? Because look at Raytheon. Raytheon had a fantastic run all the way to 229, and then it drops to 144. There again, 28 to 30% decline. That is a huge decline, but it's not running back like Boeing, GD, which is General Dynamics. No. It's done very nicely from the bottom that was made at 144, but this was at a 230 just months ago, half a year ago. So, I mean, this is serious stuff. So that's very different. So I hope that clarifies that. And I thought, I was in my mind quite sure that I clarified that I was wrong, saying that Boeing would not go to all-time highs. It not only went to all-time highs, it went 30 points above, and then it took a huge tumble. And then I said, I don't know now whether it's going to an all-time high, but it's making the U-shaped pattern. But it is not in the defense area. It is in the airline area, and makes it a different kettle of fish. Dow's up 110, S&P's up $4.58, lagging quite a bit. I'll be right back. Basil Chapman, Tiger Technicians.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. So what we're looking at here, let me just get this organized if you don't mind. Here we go. Yeah. So what we're looking at here, I had a question about Google. I had a bunch of questions. I'll get to them. But Google, what is the question? Let's see, Basil. Google. So this is GOOGL. I'm actually looking at GOOG. They're the same patterns. Everything's the same. Let me even see if the price, I think the price is even the same. This is trading at 1126.57, 1132.46. Oh, it's almost like the futures where there's just a slight difference. The patterns are exactly the same. So I'm going to my Google chart. I'm not going to say alphabet. All right. And the question is, was 1177 spike high Monday at 4:15 a possible completed right shoulder of a head and shoulders top? Okay, this is a good question. Now I'm going to go through one frame at a time. In the daily chart, what we've done is a beautiful bowl formation with the left side breakdown where I've used it as the left side. It isn't a strict bowl formation because it's coming from a sharp decline, but I'm using the candle of the 10th of October, 2018 with a high of 1132. It forms this pattern that makes the left ellipse, the cup formation on the left side, and I'm using that spike news-related candle of the 3rd of December, 1124.65. And then it plummets. What does it do? It comes all the way down, makes a lower low of 970.11. 970 from 1273. You know, that's 300 points. That's a big move down. And now you've got the right side forming a beautiful cup formation to the right. And what does it do? It goes one bar. It misses by one bar in this particular sequence, hitting that exact level of 1132.17. It goes to a little doji candle on the 1st of December at 1125.00. Next day, that's yesterday, has a good candle, big green candle at 1132.80, and today's made a slightly higher high with another doji. These dojis are saying to me that if there was a pullback in 2 days' time, below yesterday's low, I don't know what's going to do it. Maybe it's the talk tonight, President's speech, I don't know. Below 1109, that would suggest to me that we could have another timeout, just a sideways pullback in Google. What will it take to break to the upside? So what are the patterns we're looking at? I'm going to squeeze this so that you can see it even better. So the pattern we're looking at is in a cup formation, you expect a reasonable look like a cup. That is the left side down to the low, back to the right side, has a U-shaped pattern. When it's flat like this, bowl, B-O-W-L formation, I like to go from key metrics on the left side, key candles, key peaks, key moving averages, the 200-period moving average, a bunch of things. and I like to see what it can do. And then not only that, you get two doji candles. I've got two silent doji candles here. Let's see what happens over the next few days. Why? Because if for any reason there's a push in Google through the gap of the 9th of October low of 1137.57 and the high of 32.17 the next day, that gap, 5-point gap down. If there is a gap that holds very well and it pushes it into, I would like to see above the Chapman wave inside wedge, repellent target, repellent zone. If it can get into, if we can get to 1140, that's only 14 points away. Yeah, if we can get to 1140, I would have to say to you that the MACD will continue improving and the stochastic at 89% will probably go to 91 or 92%. And I would not be looking for Google to suddenly pull back, especially after the news. Yesterday, it was up 30-something points. And then the news came out and it kind of, it was up and then it rallied after the earnings report. It immediately rallied about 40 points. And then you look at it, was down 8. And then overnight it was down 28 points. It was down very sharply. And now what we're looking at is 1117.25 was the print low. And it is trading 9 points above that at 1126 with a little doji candle. So I would say the next 45 points on a closing basis, either up or down, would give me the trading, I'd say range, but you're not interested in the range. It would give me the trading direction for at least the next, going into Friday. A really good close tomorrow says, you know what, it can continue bouncing to the upside into Friday, and a pretty lousy close tomorrow says, you know what, we're done for now. It and many of the other major stocks are going to take a bit of a breather. The weekly chart has crossed positive in the MACD. Stochastics at 78%. That's good. And I would just say to you, 1,086 on two moving averages crossing right now. That's going to be key support on any pullback over the next 3 weeks in Google. Now, the question is, this is not quite a right shoulder failure. I would have much preferred that it was, to talk about it would be the equivalent of like a head and shoulders pattern on the left with a high at about 1195. What is that? Let's call it 1186. So if this can go at any point, even up to around about here, 1165 to 1170, and then start to roll over, then I'd put it into that category. This is just going to be a fading a leg A to the upside pattern. That's all, like a dreaded H. This is more a dreaded H pattern. A little higher, puts it into the shoulder. We're thinking the same thing, but I'm being very specific as to Chapman wave methodology, and the MACD and stochastic are very poor in the monthly chart. It says to me there's a good chance that Google is going to have a trading band for now. Probably 1145 is going to be upside resistance, and key support has to be 1110 to 1100 over the next, maybe in less than 3 weeks, maybe just 6 days. That's going to be very important. Question about Boeing. Hey, Boeing. I just did Boeing. So what I want you to say is that Boeing, this breakout to the upside in the weekly chart, I can't call this an E. This has to be a B, and that says Boeing, under worse conditions, should make a C and a D over the coming months. Boeing is very positive. This action is very positive. Now, I had another comment made. I'll call it a comment because it's not really, yes. So I had been talking about, let's just go back to the Dow. I had been talking about the monthly chart being very, very poor technically. But remember, I don't know how many times I've said it, and I'll say it again. Price is the arbiter of a trend. If the MACD and stochastic are very poor, but the price goes above the 9-period moving average, I have to contend with that, and I have to say, you know what? At this particular point, the price is acting very well. That's the Dow. So I'm going to emphasize it again. If the technicals deteriorate, but the price hangs in, am I going to go with the technicals or am I going to go with the price? I'm going to go with the price until it fails. So until the Dow starts to close on a monthly basis below 24,500, at this particular point, I have to say, nice action. That's the reason why we've been mostly long in positions. And I haven't been talking about shorts until we did just a very short attempt a couple of days ago. And I might be ready again to have a trading short. But I like what's going on here. And we'll talk about XLF when I get back.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a two-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So I was asked about the IYT, which is trading very nicely. Yes, it's like a worm formation, just candle after candle. Not very big, but all green. And finally, we're getting a little bit of a red one here. That's why I'm saying I think we're a little bit toppy here. I'm not calling for a massive smash to the downside, but I do think there's a breather coming. And I'd be wrong if the IYT at 183.59 under the 185.71 200 period moving average actually suddenly trades by Friday. You're looking at it in the 186s. Wow, that'll really be surprising. That'll be a big positive. Right now, I think the technicals and the daily are really good. I think it's going to pull back. So we've got a brief amount of time. Let me just do a couple of things right now. My opening call, my daily newsletter is very, very specific on what we're in, what we're out, and I follow in great detail. I give a synopsis of what we're looking at here. Every weekend I do this, and I give you my outlook for the week, where we are. Here's the Dow. I said the Dow is in a buy mode in the daily. It is in a buy mode, a buy signal in the weekly. I haven't yet got a buy mode signal. That just says a buy signal, and that the monthly is still in a sell signal, not a sell mode yet, but a sell signal. And then I go through all the parameters, what we're looking at and why. Let me just check. What is this? This is my daily newsletter. This is today. And what I said was this is a 120-minute chart with a chance that we're going into a leg F right here, Chapman wave 5. How we hold, we've got 25,277 resistance. We went above that, and we're within a trend line. I give all the parameters, what to look for intraday, etc. Then the positions we have. I don't know which one this is. Did I take them all off? I think I actually took them off because I was just cleaning it up, getting it ready for. Yep, I gave this. Where is it? All right, let me just show you something here before we run out of time, because I wanted to show, did I do that? Yep, I did. Very good. So that's the RYT. The XLF is really what I want you to show you, the reason why we're still in our bank stock, because holding very well right now is going to be very important. What is important as far as the XLF is concerned, you see how it's starting to struggle, just slightly higher highs. Look, this is leg E right here underneath the 200-period moving average. This says to me the market is getting a little bit tired and it just needs a breather. There's not a big deal with a breather. That's why I wanted it just as a trade to go short. I still might do that. I'm not sure. Maybe I'll just stop and say, let's see what we want to buy on the next pullback. I'm thinking that through, because there might be a little bit more than a quick trade. We'll see what happens. Hey, stay tuned for Steve Rhodes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.